I'm not much of a math guy, but I did run some numbers this morning. And between your name and mine, we cover 61.5% of the alphabet.
That's a great, I mean, I think you could be a trader. That's quantitative analysis. It's perfect. Yeah.
The Business of Betting podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming industry. 4 out of the top 5 U.S. operators personalize player experiences with Optimove, the #1 CRM marketing solution for the iGaming industry. Learn more about Optimove by requesting a demo at optimove.com/businessofbetting. And if you like what you see, you will get your first month free.
All right. Welcome to the Business of Betting podcast. Yeah, we've been around for a while, but this is my debut. So welcome. My name is Jeff Edelstein. Some people pronounce it Edelstein, which is nothing compared to what I'm about to get myself into here with, I'm going to try it, my guest today, Adhi. Adhi, why don't you just tell me your name?
It's Adhi Rajaprabhakaran.
Adhi Rajaprabhakaran. Now, Adhi, your Substack is 50 cent dollars. Go there, check it out. We're going to talk about prediction markets, but before we get there, I do need to note that I know you're a math guy, yeah? Is that a fair assessment? I'm not much of a math guy, but I did run some numbers this morning, and between your name and mine, we cover 61.5% of the alphabet.
That's a great, I mean, I think you could be a trader. That's quantitative analysis. It's perfect. Yeah.
So yes, our names combined, 61.5% of the alphabet. So that, yes, I could be a quant. And then I did a little, I'm a writer by trade, so I did a little research. Your name, do you know what your name means, your last name?
It's something like the god of the sun or something like that. I don't know exactly. What does it mean?
It means the king who radiates light. Your last name means the king who radiates light, which is nice. So you really do have that going for you. My last name in German means precious gemstone. On top of that, in German, the word schmuck means jewelry, jeweler. And so if you ever go to Germany, you're going to be confronted with a lot of signs that say Edelstein schmuck. So I'm going to give, if we were given points on this, like around the horn style, you're winning this round, the king who radiates light. And what I'm hoping for today is that you radiate a little light on the prediction markets. Now, tell us about yourself. You got involved, you were a trader at Kalshi, correct?
Yeah. So, I mean, I started off trading prediction markets on my own, and it was quite niche and small. This is in the summer of 2020. And then after 6 months of doing it for fun and kind of just getting my toes wet with it, January 6th happened. And January 6th, I made more money in one day than I had ever seen in my life to that point. And I thought, okay, I think this is my sign to go pro. And so I quit my job. I was an economist before. I left my job and just went in on prediction markets full time. And that led to me meeting Luana at Kalshi. And one thing led to the next. They hired me as a trader. So I continued trading prediction markets, but this time for Kalshi trading. And so that's like but some people like to call it controversial or whatever, like if the affiliated market maker of Kalshi, the exchange. And so I don't think it's controversial. And of course I would say that, but I was a trader there for a couple of years and then briefly worked at the exchange, helping the exchange side out with market structure and contract design and stuff like that.
So let's just roll back to January 6th for a moment. Tell me, everyone remembers I don't care what side of the political aisle you're on, but you saw it as an opportunity to make some money. So what were the markets like? I mean, because Kalshi obviously was out there, not at the tip of the tongue for most people at that point in time.
No, so Kalshi did not exist. This was January 6th, 2021. So we're coming up on the 5-year anniversary, and Kalshi only came out later. And so this is all on predicted.org. And on January 6th, basically what happened was that there was these markets about how many representatives in the House will vote to certify the election, yes or no, right? And then also markets on which senators will vote to certify, which people, this and that. There's all this thing about the certification. And when the riots happened and they drove into the Capitol, the markets freaked out. And the general thesis was whatever we thought was the width count in the morning, which, of course, people knew what was going to happen because every journalist had asked every, House of Representative, what are you going to vote? Are you going to vote yes or no? Are you loyal to Trump? Yes or no? Right. And so there was most Republicans were going to vote to not certify, right? And then what happened is that the riots happened and everyone in the markets thought, wow, this is so bad. This is democracy at risk. And so all the Republicans are going to have a change of heart and vote to certify and like get the country back on track and kumbaya. And I just call bullshit on that. Me, friend, one of my best trader friends, he's a professor of political science and his specialty is congressional polarization. So him and I are messaging each other while this is all happening. And we're like, yeah, they're not going to change their vote, especially now, because if anything, they're more scared of their constituents and Trump than ever. So if they were going to vote to not certify the election, this riot is like not going to change their mind. And so even if they don't believe that they should be not certifying the election, if they believe the election was fair, they're still going to vote to not certify it just to stay on Trump's good side. And that's pretty much exactly what happened. So at that point, the markets were pricing that extremely cheaply, 2 to 3 cents on the dollar. And we bought those shares heavily and we did very well. And so that was like one of the best trades I've ever made. Definitely the best trade I'd made up to that point. I'd only been trading prediction markets for 6 months at that point. And that was like, kind of like, okay, I think I have an edge. I think I understand the markets better. And I'm like making more money than I am at my normal job. So let me pursue it full time.
Now, I want to talk about your Substack in a second, but I just want to roll the clock back even further. So you said you had only been doing it for 6 months. What provoked you into the streets to begin with?
I read about Predict It in Nate Silver's book, The Signal and the Noise. And it talked about, how prediction markets use 2 things to generate really accurate forecasts, which is like putting your money where your mouth is. So it cuts through punditry, it cuts through bias, and then wisdom of the crowd. So it's thousands, now hundreds of thousands or millions of people all betting against each other. And so it's the average amalgamation of everyone's opinions. And that tends to be better than any one person's opinion. And so I went from never having bet on anything in my life to checking out Predict It, seeing that I was like 50-50 and thinking, this feels wrong. Like it's peak George Floyd, it's peak COVID. I feel like Biden has a better than 50% chance. I thought it was more like 80-85%. So I deposited $100 and, that's how it starts. It may be a familiar story, but luckily my story was positive. I realized I had a pretty significant edge. I think my background as an economist helped for sure, but also I was just I loved doing all the work that was required to be a good trader, which is like tons of due diligence, tons of data analysis and everything. So yeah, that's kind of how I got into it. It was just through Nate Silver's book.
There's also like a pretty big sense, to me at least, of vibes trading here, where, and I'll give you, for instance, I'll give you where I'm sitting right now. For the first time ever, about a month ago, I dove into the Kalshi waters, and I live in New Jersey, and it's the governor's race this year. And the Democratic candidate, 88 cents to win them. And I just know that that's wrong. Like, she's not 88% chance. I live here. I breathe it. I know it. So I invested a little bit. I'm up right now. The market's starting to tighten up a little bit. But that's just, again, I feel as if a lot of these markets, if you are, you have your finger on the pulse of something, you really can, I feel like, you could almost do away with the math at times, which also brings me to a question. I'm going to call myself agnostic when it comes to my feelings on prediction markets and all manner of regulated, legalized gambling, right? I know that like in the past, pre-Kalshi, when it was just predicted floating around and they're coming out of New Zealand, right? The big bull case for all this was economic hedge, wisdom of crowds. And then, you fast forward to today, literally, where I can buy an event contract on the Tigers, right? Is there an economic hedge there? Or are we past that and, that's in the rearview mirror?
I wouldn't say hedging is in the rearview mirror. I would say it's always going to be, it just depends on the market, right? So I think this is one thing that maybe would help if people start to conceptualize Kalshi as not just a monolith or like just a sportsbook. Yes, like there's facts, right? 85% of the volume on Kalshi right now is sports markets. And sports markets are really hard to justify as a just hedging mechanism. But there's also the markets that are actually good for hedging, which is, for example, the student loan Supreme Court case market, right? People were actually using that to hedge against they don't know if Biden's going to actually forgive their student loans or not. So they bet against it and, lock in their profit. So it's just like when people I think there's this urge to like paint prediction markets with this broad stroke and just say, oh, it's all gambling, it's all sports. It's not really the case. And I feel like I can say that because I got into it well before anyone could have anticipated that sports would take over. there's also like, I think this value in just the price discovery in and of itself. So there's a lot of contracts out there, not just sports, but, like gasoline futures or something like that, where the volume and liquidity may not be high enough for someone like, Exxon Mobil to like efficiently hedge themselves. But just the fact that people are trading it against each other and creating a price signal is in and of itself valuable. So if we want to talk about like what is like the societal value of like these sports markets, like that could be one justification. If you're curious of who's going to win the Super Bowl, you can go on Kalshi.com and find out, right? And what the probabilities are. But also, lastly, I think there's so much like vitriol towards prediction markets because there's this impression that like we're trying to not pretend we're not gambling and pretend it's not speculation and risk taking and all that stuff. But like it is. And I think that is also part of the product that prediction markets are selling, is that with any kind of speculation product, what the user in the end is buying is volatility, right? So like when you pay $10 to win $100 on the Lions or whatever, I don't know who's good or who's bad. It's like, the point is that you're buying fun. When I watch the Lions, I have a little bit more excitement with it. And my net worth can go up or down a little bit. And that is really the product here that is being sold. Maybe that's just my piece on like the role of prediction markets and what it is. Yeah.
Well, let's talk about your Substack for a second. Again, 50 cents dollars. Why'd you start it? Is it more of like to be a Pied Piper for the industry? Is it more to be an explainer for the industry? Is it a little bit of both? Is it for the layman? Is it for someone, within this world? I found it useful myself because there is so much under the surface that is unknown to 99.9% of people when it comes to this stuff. Like, how it works on the back end. But I'll let you take it. Who's this for? And what was the goal?
I think maybe explaining or educating is my main objective, but I also just very selfishly, like I enjoy the act of writing. I enjoy the act of when you write something, especially, if you go and read my blog, like I'm writing about stuff pretty in depth. It's not just, oh, someone went on TV and said this, or this is what's happening in the industry. It's like, why are things the way they are? And the act of writing it itself helps me and my thought process and clarification and learning of everything, right? So like I wrote this very lengthy and deep blog post about preemption, which is like the legal doctrine that's being debated in the courts with like the states versus Kalshi and Robinhood. And going into that, I didn't know about it. I just like researched it a lot. And then I called lawyers and I talked to them. I got their feedback and I learned it enough deeply to the point where, okay, now I can like quote which parts of the statute of the CEA are relevant and like what rule 40.11 is and which judge thinks which way the case is going to go, et cetera. And like, this is just really a repeat of everything I've been doing in prediction markets for the past 5 years, which is when you want to trade something and you want to trade something profitably, it's all a race to like learn the thing as quickly and deeply as possible because you want to make money off of this. And if you don't know, you're going to get beat by someone who is learning it deeper than you. So I think like, it's just kind of, I've built that muscle for the past 5 years and writing is this outlet for that muscle that I find really enjoyable as opposed to just trading. When I'm trading, you can't really talk about what you're doing because then you're giving it away. And now I just find that so enjoyable. So I think like, I worked at Kalshi for a bit and I did the trading thing. And like now maybe I can develop a career as a writer. We'll see. I do find it very enjoyable.
You're still out there trading though on a daily basis?
Not right now because I'm still in my timeout period from Kalshi, but that's actually, I'm counting the days. That's coming up in a couple of weeks. And even then, I think like trading is such a difficult job. It really requires, if you want to be good at it, it requires 110% commitment. So at this moment, I'm having so much fun blogging and talking to people and everything, going on podcasts that I wouldn't dive in seriously, and especially not with sports, because I understand very well that I have no edge in sports. If a new market structure came along, I might be interested.
Is there a little concern? I don't know if concern is the right word, but let's say that the prediction markets, take off to the moon, right? That it's going to make it that much tougher to actually, for a quote unquote novice like myself, to jump in and make a few bucks, being that like, if everyone's doing it, that like everything's going to get tighter and the price discoveries, it's going to be like a Sunday at NFL action where everyone knows what the price should be.
there's always going to be some product that is soft, right? Like, yeah, it's too late. You're not going to, on NFL money line, forget about it, right? But move on, find something else. If your goal is to make money, then you have to be smart about where you pick your spots, right? If your goal is to have fun watching the game, then go ahead and bet the NFL money line markets. Like, no one's stopping you, no one cares. But if you want to be a profitable trader, find the markets where you have an edge, and there's so many of them. Maybe your edge is like WNBA props, right? Or pickleball, or semi-professional Australian basketball. You know, one of my best friends makes hundreds of thousands of dollars a year betting that. Not on Kalshi, but overseas. But like, it's like just the less popular the sport and the less liquid the market, the less sharp the odds are going to be.
We're taping this on Tuesday, and on Monday, two things happened that I think, when the history is written about all this, there's just huge things that happened. The first one, let's talk about the SEC CFTC roundtable, which is the first time that they've sat down, from my research, in 14 years, where they decide to get together. I'm writing a piece, I'm likening it to a couple of competing mafia families, sitting down and hashing things out. On top of the SEC and the CFTC sitting down to harmonize, they also bring in the CEOs of Kalshi and Polymarket, two men who famously aren't exactly best of friends. It really had the feeling of like, all right, let's sit down and hash this out. You were there. What's your takeaways from what you saw?
It's funny. Yes, obviously the CEOs of Polymarket and Kalshi are rivals, business rivals. Shane and Tarek maybe don't have like the greatest relationship, but that was the vibe going into the panel. But what I noticed was right off the bat, Jeffrey Sprecher, who is the, top dog at Intercontinental Exchange, was a $100 billion company, immediately took some swipes at both Tarek and Shane. And that completely reset the tone, in my opinion. Maybe people were expecting fireworks between Tarek and Shane, but it immediately went to the old guard versus the new guard, or the new blood was in the room. And it's clear from, in my opinion, everything that the old guard was saying. These include titans of industry, Jeffrey Sprecher, Terry Duffy, right? These guys have built the derivatives ecosystem as we know it today. They are using this roundtable as an opportunity to punch down on the little guy. I felt like it was unbecoming, to be honest, because, at one point, Terry Duffy said something like, oh, like the CFTC needs to create an even playing. And the implication, obviously, like anyone should go back and watch the recording, but the context was like, the prediction markets are moving so fast and doing things kind of on the edge in terms of what's legal and what's not. And Terry Duffy was saying, the chairman of an $85 billion behemoth company was saying, we need an even playing field. I'm just like, what playing field are you talking about? Like, you just got outcompeted by like a couple 20 somethings, like a company that's less than 30 people at the time. And I think it's just kind of like saying you had a huge lead and you could have done it and you got beat and you're saying, ref, do something. Like CFTC, hey, slow this down so we can get ready so we can do it too. And it's like, no, the playing field is that you were all DCMs, you're all exchanges who could certify any market. And everyone was capable of certifying sports markets when everyone did it. And you didn't because you're worried about the legal implication and stuff like that. And that's fair. Jeffrey Sprecher also said something like this, like, oh, because we're publicly traded companies, we can't do things that would like take risks, like and that would result in a Wells notice or getting raided by the FBI. And it's like, okay, like that was your choice to go public and you're like a gajillionaire now for that. So how can you blame like 220 somethings who are new to the scene? Their companies are about prediction markets. The entire lifeblood, whether the company survives or not, is about whether they get election markets, whether they get sports markets, whatever. So you can't like really be shocked that they beat them to it because they need to do it to survive. It's existential. For ICE and CME, they're enjoying extremely high revenues with some of the best profit margins in the entire economy of the world, right? They're up there with Visa and MasterCard, right? Like, of course you didn't go for it because you're risk averse and you're not really trying to innovate anything. So I don't know, maybe I feel a little passionate about it, but I just felt like it was a ridiculous thing to say that like the playing field wasn't even.
And what was the sense you got from the CFTC and SEC rep score?
They didn't really say much. I think it was mostly the panelists just kind of going after each other. It got kind of barbs were thrown and the regulators themselves were on the sideline of the panel.
The other big thing that happened yesterday was a few hours after the panel for eagle-eyed watchers going on to Kalshi there. You could put a parlay down on the football games last night, which, zero fanfare. Apparently immediately had an effect. DraftKings and Flutters, both their stock took a tumble. I hadn't checked yet, but they took a tumble this morning, 8%. So, I think we can draw a direct line here. Did parlay came out of nowhere, or did you have a sense that this was going to drop? Or
Oh yeah, it wasn't a secret. Kalshi has executed parlay contracts well in the past. They did it for the Oscars, they did it for the Grammys. So they've had the tech to do it. It was just only a matter of when it comes to doing sports parlays and especially same game parlays, which is maybe the most popular and important product in sports betting at the moment.
right.
So of course they were going to do it, and they did it. And the reason why they were a bit quiet about it going into it is because this is not an easy thing to price, right? So the market makers who are not the exchange, I think they're working to get good at pricing this and make sure that it's working properly. So like Kalshi doesn't want to go and spend $1 gajillion on ads saying, hey, same game parlays legal in Texas now, when they're still ironing out the kinks. But it's going to scale extremely quickly. So yesterday, $260,000 of volume was traded on parlay contracts on Kalshi. And if they roll it out for Thursday, I think that number is going to be significantly higher. And I think this product is going to grow exponentially. Right now, this past Sunday, Kalshi traded about $285 million in volume, and about 90% of that was sports volume. And so I think parlay volume is going to be, about a quarter to a third of the overall sports market volume. And so, do the math. A third of 285 million is about 94. Yeah. So, I think very soon parlays themselves would be like $100 million a day product. Like, it just seems the writing is on the wall. Kalshi has the distribution. They're legal in all 50 states, and most importantly, California and Texas. And it's just like, of course, DraftKings stock tumbled. What I am shocked about is how much it tumbled and how little of this was priced in. I question like what's going on with the people trading these stocks. Like, how did you not know about this existential threat? Everyone in prediction market world kind of knew this was coming, knew it was happening. So I guess you just kind of have to see it and feel it for real to really get the message. And that's what happened last night.
Well, related, and I'm going to put you in a spot where you don't have the insight, but if you were sitting in the C-suite of Flutter or DraftKings, what are you doing right now? It's a tough spot they're in.
First of all, I'm concerned. I should say, I think if I'm there, I'm very concerned about this. You can't just brush it off. I think like a lot of gaming industry people, a lot of sell side analysts, they're writing stuff like, oh, it's so small. It's so whatever. It's just a pimple on the side of the industry. And my response to that is like, yeah, I'm sure the meteor looked really small to the dinosaurs when it was really far away. And like, it gets bigger and bigger. And I think part of my job here is I'm deep in the data. I'm tracking it really closely, and I can see how big the meteors get. And if I'm Flutter and DraftKings, I'm taking it seriously. And then there's a couple ways you can try to fight against this. One, with political will, right? Pour more money into lobbyists. You try to like convince the CFTC, hey, block this, or get the best lawyers and sue and work with the tribes and everything, right? So that's one angle. And they can and will try that, and good for them. But the other angle is like, okay, if you can't beat them, join them. And we've already seen this with FanDuel and CME Park. And so I'm sure they're building this out. They are planning for a Q4 launch with that product. And it's supposedly not supposed to be about sports in the beginning, but I think it's clear that they're setting it up to be sports ready when they feel like they have the legal all clear to go through. And in the meantime, these companies like Polymarket and Kalshi, who don't have to respond to the wishes of like public equities investors, are getting after it, and they're taking the risk, and they're on the edge and making it happen. And if you are DraftKings and FanDuel and you're thinking like, let's wait and see and get into it later, that's kind of a scary proposition. If I were them, I would just be doing what Crypto.com is doing, for example, and Underdog, which is like trying to get in there right now and compete with Kalshi and do the best they can, because this is going to be pretty winner takes all market.
People listening to this podcast know of the meteor. Everyone listening to this podcast knows of this meteor. My friend who I've known, he is a large gambler. He's a VIP at DraftKings. He has been playing the ponies his entire life. He owns horses that race. He's a card player. He is a gambler in every single step of the word. He has 8 televisions in his basement. He is that man, okay? Now, 2 months ago, I said, hey, I like this New Jersey governor's play on Kalshi. And his response to me was, what's Kalshi, right? So that meteor to us is burning fireballs screaming through the sky. But to the average person out there, even the average gambler, it's barely registering on the radar. What is going to flip it? When is everyone going to see this meteor? What's going to happen?
I can't say for sure, but it seems pretty obvious what Kalshi's strategy should be here, which is they are right now printing money and look at this. They are very nimble. It's still less than 100 people work there. And I joined, I was employee 25 when I joined. And so I think their profit margins are really fat and they've raised a lot of money. So the obvious thing here is to try to win the market. And they are going to go crazy with marketing, especially if you're already profitable. Like you can just take all the P&L from every Sunday that makes millions of dollars and roll that into ads for the week and double down on it with, Sequoia and Paradigm's venture capital money and just go crazy until everyone has heard of Kalshi. That has been the strategy for sports betting companies. FanDuel and DraftKings, they're the best. They spend an absurd amount on customer acquisition. And if I'm Kalshi, that's what I'm going to do because you have to go all in right now. Like, I think that's what they'll do. I think 1 year from now, Kalshi will be pretty household name. Yeah.
But what's going to make them pull the trigger on that? What are they waiting for exactly? I mean, I know they had the Super Bowl ad or whatnot, but what's going to push them through? Do you have any insight there?
I think actually the parlays was probably one of the things, right? Because if you spend all this customer acquisition and you get all these users onto your platform and they look at it and they see, oh, I can't even do parlays. Okay, I delete the app and I go back to DraftKings, right? So they've been waiting. I mean, I don't know. I haven't worked there in a while, but like it seems pretty obvious that they should wait until all the pieces are placed in place. They have the parlays, they have the spreads, they have the totals, money line. And they are now covering like the majority of what people care about. Yeah, like it's not 100% matched with DraftKings offering, but it's mostly there. And so now that those pieces are in place, it's time to turn on the taps and get people onto the platform.
What's the solution for fixing things like Zelensky's suit, where the market is settled, but it's arguable that the correct decision was made? Is there easier fixes for this, or why don't you explain to me exactly what happened there and what the future holds for things like that?
Yeah. So you're referring to will Zelensky wear suits? This was a market on Poly Market, not Kalshi. So importantly, it was offshore, it was crypto, and the decision was made by this like decentralized Oracle situation. And, I don't want to get too much into the details of why I think that itself is a problem, but the solution to these rules issues, well, like for the listeners, the problem was like Zelensky wore something that some people thought was a suit and some people thought wasn't a suit. The solution is that you just have to be better about writing the rules of a market, and you have to be more careful about creating markets. Every prediction market ever has been caught flat-footed with some kind of rules issue. And the key problem here is like, there's a lot of unknown, right? And when you write the rules for how to decide a market, there's things that you couldn't even have thought of that would affect the outcome. And so it's really difficult to write the rules. So the solution is just like, be more careful, I think, or don't do it at all if you're very afraid of the risk of pissing off some of your traders.
We've talked a little bit about the past, talked a little bit about the present. Now let's talk a little bit about the far future. Everybody that I've talked to who covers this industry-wide, lawyerly-wide, academically-wide, they all think that this is going to end in front of the United States Supreme Court at some point. Some state, whether it be New Jersey or Nevada or Massachusetts or whomever, is going to get this in front of the Supreme Court. And then, and I would assume, much like I assume the states' rights issue comes to the foreground. Who knows if and when this happens? That argument, though, feels like it does hold water if you're on, looking to like put the prediction markets out of business in your state. That this is, a states' right issue. This court famously is a states' rights court. Is this a concern, like at the highest levels of, Kalshi and others, or is this something that you can't think too far into the future? Or, what's the thought process on that at that level?
Yeah, I would say it is a concern. I mean, I think the entire history of Kalshi has hinged on legal battles, right? The legal battle to get the election markets. Now the legal battle to keep the sports markets. And they're different legal battles because the first one was against the CFTC itself. And now this one is against the gaming commissions of various states. I can only imagine it's existential for Kalshi. So of course they're concerned about it. And they're going to be trying their best to fight this tooth and nail. So yeah, I also agree. I think this will end up in front of the Supreme Court, if only because we've already seen evidence that kind of intimates that the appeals court, which is the level right below the Supreme Court, might have a split decision. One appeals court says Kalshi's right. Another appeals court says the tribes are right, or New Jersey is right, or Maryland, or whomever. And if that happens, then that is exactly what gets teed up. And I see that happening, but it's going to take a while. It'll take until, I think if the Supreme Court does hear this, it'll be in 2027. So in the meantime, Kalshi is going to rip.
It's a while, but it's not that. I mean, that's a blink of an eye, really. It's going to be a fascinating issue to watch. My favorite market out there right now is on Poly Market. I don't have the numbers in front of me, but it's whether or not Jesus Christ will come back this year. It's a no-brainer. I mean, you bet the no. You bet everything you have on no. If you win, you pocket a few $100. And if you're wrong, I mean, world's ending anyway. You don't need the money. So it seems like the best bet out there. All right, listen, sir, you have lived up to your last name. You have radiated light upon myself and our listeners here when it comes to prediction markets. I'm going to ask you one last question before we go. Misconceptions. Is there, in-house at Kalshi, are there misconceptions that they know of that they have to fight against to get, Joe and Jane better around to their way of thinking?
I just want to be clear, I don't work there anymore, so I don't know exactly what they're thinking. But yeah, I think maybe the biggest misconception is that Kalshi is just a sports book, right? That it's a sports book with extra steps. And it's kind of a difficult concept to explain. So I don't blame Kalshi for not trying to. And I try to in my latest blog post. And I think I'm right, or I wouldn't have wrote it, but the blog post is called Yannick Sinner is my peer, right? It talks about how this is a peer-to-peer exchange. It's not the same as a sports book because the entire system of trading futures contracts is a disintermediated system, meaning you can deposit your money on Robinhood. They're the broker. Then you make a trade on Kalshi. They're the exchange. Then Kalshi Clear, the clearing organization, holds the funds in the meantime. And then the counterparty is someone else. It could be you or me or a professional market maker or someone who's good or bad. It doesn't matter. And so the business model is so fundamentally different from sports books. Sports books are they are everything. They're the broker. They are the clearing. They are the counterparty. They're the exchange, all in one app. You can only trade against DraftKings. And so what is going to happen here is the revenues that accrue to companies like DraftKings are going to are dispersed amongst an ecosystem of people. So the fee revenue will go to the exchange. The trading P&L will go to market makers and professional traders. And so this is something that's kind of hard to grasp for people. The fact that it's all separated out means a lot. You can do much more with this model than you can when everything's in one single house. And one example is that anyone can trade anything. There's no such thing as getting limited, right? You're limited by your bankroll and the liquidity in the market. So this is just something is not appreciated enough. And even when I tried to explain it, I got a lot of pushback. I think there's this conception that sportsbook are gambling, prediction markets are gambling, therefore prediction markets are sports books. And I just think that logic is kind of flawed. And this issue deserves some nuance. And I tried my best and it didn't really land. I got a lot of hate on Twitter for it. And so I don't blame the exchange for just avoiding it entirely. But maybe this is the thing that serious people who are watching prediction markets closely and the industry closely should really make an effort to understand. Because what is happening when you buy and sell DraftKings stock, I think is just a really convoluted way to bet against retail, right? What is DraftKings doing? They are selecting the worst gamblers and betting against them. And then that revenue is accruing to the company and accruing to the shareholders. So when you buy DraftKings or Flutter stock, you're just buying into a trading strategy that's really inefficient and really convoluted. And you can see this when the EBITDA forecast of DraftKings goes up and down depending on how a star player did over the weekend. So the stock will move up and down according to whether Patrick Mahomes hit his over. I think that's insane. Like, I don't know, it's like a crazy concept to me. So why, there's so much demand to buy DraftKings stock and get a piece of this pie of like betting against retail. Now that pie is going to be completely dispersed amongst market makers and traders in this general ecosystem. You have to think more like it's like Jane Street or Citadel than it is DraftKings. So this is just how I feel about, the meteor coming, right? Like if you are holding a lot of DraftKings stock, like you have to think critically about what you're actually buying and what is about to happen, which if you want that same expected value of trading against retail, like you're going to have to like give money to a hedge fund soon, not DraftKings.
I said I was going to let you go, but I saw somebody post on Twitter yesterday. I forget who it was. It was jokingly, but maybe not so joking. Is there a point in the future where like a prediction market could put up, like where we turn casino gaming into the same principle, where 5 cherries at 2 cents, you found what I'm saying? Like, is that on the horizon or is that silly?
That's another thing about sports betting business model is that it's really kind of all just a funnel into slots, right? And that's a huge part of the revenue. I really hope we don't go there. If that happens, like I will make it my mission to stop that, because that is just like antithetical to my philosophy of like risk taking, right? This is just, leave that to the casinos, for the love of God. I hope the prediction markets don't go down that route. And like, yes, it's gambling, but if we have slots and roulette prediction markets, that's a very disturbing thought. That is like full like post capitalism dystopia. And I really hope we don't go down that.
I've taken a lot of your time. Tell everyone where we could find you.
Yeah. So my Twitter is 80 high. That's the number 80 spelled out in letters. And HI, it's 80HI, which is like a fun about how to spell my name. And then my blog can be found at 50centdollars.com, all spelled out. And yeah, you can just find me in those 2 places that where I'm most active.
Thank you very much for joining us. You really fantastic conversation. A lot of eye-opening stuff here. A lot of stuff that, and again, I just think that there is like with the meteor en route, I think there's a big learning curve, I think, for a lot of people, and you're helping to flatten it out. So thank you very much for that. And for everyone else, thanks for listening, and we'll see you again next week.
The Business of Betting podcast is presented by Optimove, the #1 CRM marketing solution for the iGaming industry. 4 out of the top 5 U.S. operators personalize player experiences with Optimove, the #1 CRM marketing solution for the iGaming industry. Learn more about Optimove by requesting a demo at optimove.com/businessofbetting. And if you like what you see, you will get your first month free.